Wenn wir auf das Jahr 2026 blicken, wird die wirtschaftliche Lage von einer Mischung aus moderaten Wachstumsprognosen und anhaltenden Sorgen über Inflation und Rezession geprägt. Das Verständnis dieser Trends ist für Investoren, die fundierte Entscheidungen in einem sich schnell verändernden Umfeld treffen möchten, unerlässlich. Inflations- und Rezessionsrisiken können die Märkte erheblich beeinflussen und wirken sich auf alles aus, von den Konsumausgaben bis hin zu den Anlageerträgen. Indem sie sich dieser Faktoren bewusst bleiben, können Investoren sich besser positionieren, um Unsicherheiten zu bewältigen und von aufkommenden Chancen zu profitieren. Ein durchdachter Umgang mit Wirtschaftsprognosen wird der Schlüssel zu klugen Investitionen im kommenden Jahr sein.
Global economic growth projections for 2026 suggest a period of moderate expansion, with several leading financial institutions providing cautious optimism. The International Monetary Fund estimates global GDP growth will reach around 3.2%, reflecting a steady but tempered pace compared to previous years. Morgan Stanley also anticipates that U.S. consumer spending and investments in artificial intelligence will contribute to this moderate growth. Despite these positive indicators, there remains a notable probability of recession, with economist surveys and J.P. Morgan Global Research assigning a roughly one-third chance of economic contraction in the United States and globally. These forecasts underscore both the opportunities and uncertainties facing the world economy in the coming year. U.S. economic growth in 2026 is expected to be shaped by several key drivers, with consumer spending and investments in artificial intelligence playing prominent roles. As households continue to spend, this activity supports businesses and fuels overall economic momentum. At the same time, capital expenditures in AI are projected to accelerate, fostering innovation and productivity gains across multiple industries. These factors together contribute to a moderate growth outlook, even as broader challenges like inflation and recession risks remain. Understanding how these elements interact is essential for anticipating future trends in the U.S. economy. Inflation trends in both the United States and the United Kingdom are showing signs of change heading into 2026. In the U.S., core personal consumption expenditures, or PCE inflation, is projected to end 2025 at 3.1%, with expectations of rate cuts by the Federal Reserve to help moderate price pressures. Meanwhile, the United Kingdom is forecasted to see a significant decline in inflation throughout 2026, potentially reaching the Bank of England's 2% target by mid-year. This improvement is largely attributed to disinflationary policies introduced in the autumn budget. These developments suggest a cautiously optimistic outlook for price stability in both economies. Recent economist surveys and research from J.P. Morgan highlight notable recession risks for both the United States and the global economy in 2026. According to these analyses, there is approximately a 33% chance of a U.S. recession, with J.P. Morgan assigning a slightly higher probability of 35% for both U.S. and global recessions. These forecasts reflect ongoing uncertainties, particularly around central bank interest rate policies and persistent inflation. While the likelihood does not guarantee a downturn, it underscores the importance of monitoring economic indicators and policy decisions closely. Staying informed about these probabilities can help individuals and businesses prepare for potential economic shifts. Recession risks in 2026 are shaped by several key factors, with Federal Reserve interest rate policies playing a pivotal role. Persistent inflation remains a concern, as it can prompt the Fed to maintain higher rates for longer, potentially slowing economic growth. Uncertainty around the timing and extent of future rate cuts adds to market volatility and investor caution. Additionally, sticky inflation may impact consumer spending and business investment, further elevating recession probabilities. Monitoring these indicators is essential for understanding the evolving economic landscape. As we look ahead to 2026, Smart investment strategies will be essential for navigating a landscape marked by moderate growth and ongoing economic uncertainties. Diversification remains a key approach, helping investors spread risk across various asset classes and weather potential market fluctuations. Focusing on resilient sectors such as technology and healthcare can offer stability and growth opportunities even during challenging times. These industries are expected to perform well due to continued innovation and strong demand. Staying informed about monetary policy decisions and economic indicators will further support sound investment choices. Monitoring monetary policies and staying informed about central bank decisions is crucial for protecting investment returns. Changes in interest rates, inflation targets, and other policy measures can significantly impact the performance of various asset classes. For example, anticipated rate cuts or hikes by the Federal Reserve often influence market sentiment and investment strategies. By keeping a close watch on these developments, investors can better position their portfolios to manage risks and capitalize on emerging opportunities. Staying updated with expert analyses and economic indicators helps ensure informed decision-making in a dynamic financial landscape. As we look ahead to 2026, the economic landscape remains dynamic, with both opportunities and risks on the horizon. Staying informed about the latest economic indicators and expert analyses is essential for making sound financial decisions. By keeping track of shifts in inflation, growth projections, and monetary policies, investors and consumers alike can better navigate changing market conditions. Regularly reviewing trusted sources and adapting strategies accordingly will help ensure resilience in the face of uncertainty. Remaining vigilant and proactive is key to achieving financial stability in the coming year. Thank you for watching. We hope you found this information helpful and insightful. If you enjoyed the content, please remember to like, comment, and subscribe. Your support helps us continue to bring you the latest updates and expert analysis. Stay tuned for more in-depth coverage on economic trends and investment strategies.